Investors, hello. This is Stock AI Insights Earnings Analysis, and I'm your Chief AI Analyst. Just a quick reminder, this is for educational reference only and not investment advice, because all investing involves risk. Okay, today we're digging into the Royal Bank of Canada's Fiscal Year 2025 earnings, which were released on December 2nd, 2025.
So RBC's latest report is about way more than just strong numbers. It's really a signal about where they're headed. And this quote from their annual report, it absolutely nails the theme for our analysis today. It's a story of fantastic current performance clashing with a very deliberate, high-tech pivot for whatever's coming next.
So here's our game plan to get the full picture. First, we'll break down their stellar performance in fiscal 2025. Then, we'll dive into their strategic playbook for 2026. After that, we're going to tackle the key risks they're watching. And finally, I'll wrap it all up with our final verdict.
All right, let's kick things off with their performance. And to put it simply, fiscal year 2025 was, well, a year of absolutely record-setting growth for RBC. The headline number you need to know is a massive 25.4% jump in net income year over year. And listen, this isn't just some small incremental gain. We're talking about a significant leap in profitability. And it really sets the stage for their whole strategic outlook.
Okay, now look at this chart. It really puts the scale of this into perspective, right? We're seeing a jump from 16.2 billion Canadian dollars in 2024 all the way up to 20.4 billion in 2025. Seeing it laid out like this just drives home how big that growth really was. So the big question is, where did this incredible performance actually come from?
Well, the answer is, this wasn't some one-trick pony. The growth was fueled by a really smart, well-diversified business model. Yeah, wealth management was a real star performer, but honestly, they saw strong results pretty much across the board. And you know, that diversification is a core part of their strength. It gives them both resilience and a bunch of different engines for growth.
Okay, so with the record year in the books, where does a company like RBC go from here? Let's pivot to their strategic priorities and see how they're planning for 2026.
Their roadmap for 2026 really has two big themes. First, it's all about tech. They're doubling down on digital and, you guessed it, AI capabilities. And second, they're looking outward. They're pushing aggressively to scale up in key markets like the US, the UK, and Europe. So this isn't about just sitting back and coasting. It's a clear strategy to future-proof the business.
Now, even with all these ambitious plans, RBC's own outlook is, let's say, cautiously optimistic. They're forecasting some GDP growth, slow but positive. At the same time, they're keeping a very close eye on some big wildcards, like unpredictable US trade policies and a Canadian labor market that's starting to cool down. It's that balance of ambition and caution that really defines their outlook.
And you know what? That caution makes a lot of sense. The path forward for them isn't exactly a clear runway. It's looking more like an obstacle course, filled with all sorts of global and internal uncertainties they're going to have to navigate. So, you're probably asking, what are these obstacles exactly? What are the major headwinds that could challenge this whole growth story? Let's break them down.
Okay, so the risks really fall into two big buckets. On the outside, you have all the big picture stuff they can't control. Geopolitical tensions, shifting trade policies, a possible global slowdown, you know the drill. But then there are the internal risks, and the big one, the one we really need to focus on, is a significant increase in their credit risk exposure. In plain English, that's the risk that borrowers might not be able to pay back their loans.
And just how big of an increase are we talking about? $166 billion. That's the year-over-year increase in their total credit risk exposure. That is a massive figure, and it highlights a potential vulnerability. You can bet that managing this is priority number one for them right now.
And this, right here, is where the whole story connects. Remember that huge investment in AI we just talked about? Well, this is the why. It's not just about building cool new apps. It's a strategic shield they're building to manage this massive credit exposure. They're using machine learning to get way better at predicting potential defaults and to test how they'd hold up against major market shocks.
All right, so we've looked at the record profits, the forward-looking strategy, and the very real risks on the horizon. It's time to bring it all together for the final verdict. But before I give you that final takeaway, it's really important to understand one last tool in their arsenal, something called stress testing. Think of it like a fire drill for the bank's finances. They essentially wargame worst-case scenarios, like a severe recession, to make absolutely sure they can weather the storm.
It's a proactive approach, and it's the final piece of the puzzle for how they plan to manage these risks.
So here it is, our data-grounded verdict. RBC used its diversified model to have an absolute knockout year in fiscal 2025. But it is now facing a much more complex 2026, one that's going to be defined by some serious macroeconomic risks. And that big strategic pivot toward AI, it's not just an upgrade anymore. It's become their primary weapon for dealing with these challenges.
Which leaves us with one final critical question. How will RBC's big focus on AI actually reshape its performance in an uncertain 2026? Is it going to be the defensive shield they need, or could it be an offensive weapon that actually unlocks new growth? I'd love to know what you think. Share your thoughts in the comments, and I'll see you next time.